Hey guys, welcome back to another market breakdown video. I hope everyone has had a fantastic week. Today is Friday the 29th of November and it's the last trading day of the month. It's been another quiet week in the markets, mainly due to the lack of volume as it's an American holiday. So happy Thanksgiving to all of those that are celebrating. And during these quiet periods, we should be taking the opportunity to backtest our strategies and refine our trading plans, etc. It's also a great test of self-control and discipline, knowing when you should be involved in the markets or not. This week was a great example of only taking the highest quality of trades, whether they played out or not, and learning that sometimes one of the hardest aspects of trading, guys, is actually not trading at all. So, it's the last trading day of the month, and following from a somewhat slow and corrective week, there could be some interesting moves towards the end of the day as, traders, banks, institutions look to take their profits, their month-end profits. But, for me, I'm not too interested in taking any positions on a Friday unless I see a prime setup, something which is like too good to miss. But as I said last week, we will see these impulsive breakouts. We will see these high momentum moves finally break out of these consolidation periods. And we should be planning and forecasting these moves well in advance. So starting off with the DXY, we're in a very crucial area at the moment. Now, we're still very corrective. There's been a lack of volume in the markets over the last few days, as we can see. And it'd be very interesting to see whether or not we actually have a daily candle closure above 98.45. Now, if we do, I think we could look for short-term buying opportunities as we'll be making higher highs and higher lows on the daily time frame. And it's just a matter of how high we can take this if we do see a continuation in an uptrend, or whether or not we simply stall at this level and we create some form of like a double top here with a large wick to the upside. Again, this is all depending on how the daily candle closes. But if we see those buyers run out of steam and we do print a bearish candle on today's close, then that will be indicative moving into next week. Now, if we have a look at the US dollar basket, again, you can see that we've now printed a new high and we've simply broken above this structure level. So this is looking bullish. We're making higher highs and higher lows on the daily time frame. So short term, we could see some buying throughout the US dollar. But again, I'm really interested in seeing how this daily candle closes. And, this is noticeably corrective. So this was an impulse. And this whole move here is just very corrective. So, will we just sort of continue to climb like this and then create some sort of a rising wedge or, rising channel and possibly go from here? Or we could just see price stall around this level and then go from here. So again, we're in a crucial area. This is well reflected across a lot of the major currency pairs as well. So if we have a look at Euro USD, for example, we're back at key institutional level 1.100, and you can see that we've come down for like a double bottom and we're tapping the 61.8% again. So again, we're in a really crucial area for Euro USD. Now, if this support holds, then I'll be very interested in taking long positions from here again. We took a long position from here a few weeks ago. That was a nice trade. And what happened was we simply came up to this level of structure here, as you can see, which I highlighted in last week's video. And then we saw another move to the downside. We may see a double bottom. And then if the bulls take control again at this level here, then, we can look for reasons to buy. So this is in a really key area. If we have a look at USD Swiss franc, again, we're in a very key area. So, this whole move here, very corrective. You can see it's got an ascending nature to it. So we are expecting a potential third touch and then for price to roll over from here. That wouldn't be uncommon if we did see that kind of setup. Entering at these kind of highs here is very aggressive, but in my opinion, it's always worth the risk because you can afford to swallow a 1% loss if the gain is, like a 5-to-1, 6-to-1, 7-to-1 trade. So you can afford to take those 1% losses at the top of higher time frame structure upon like a third touch and within areas of high value like we are at the moment. So again, I'm not too phased that this is broken out of these areas of confluence at the moment because the daily candle hasn't closed yet. So until the daily candle closes, there's no point flipping our bias because at the moment My bias is short for this currency pair. I do expect this to potentially roll over from these areas. But of course, if the daily candle closed like this with a huge bullish engulfing, that does suggest there is a lot of momentum. The bulls are very much still in control, and we could actually continue printing higher highs and higher lows. Now, if we drop down to the 4-hour, we can see that this whole piece of price action here is very corrective. Now, potentially due to the lack of volume over the last few days and perhaps some end of month profit taking, this has simply broken above key level 1.000, and also it's broken above this ascending trend line as well. So this could be a fake out. We do tend to see some fake out moves at the end of the month, or in particular on Fridays in general. So yeah, I mean, I wouldn't be surprised if this did in fact print a nice high test wick, and then we did see some downside movement into next week. So again, we're in a very, very crucial area, as we are for Euro USD, as we are for DXY, etc. So monitor how the daily candle closes, and then over the weekend, when you do your analysis, you should be able to ascertain from the charts whether or not you're interested in buying or selling a currency pair. And if you're unsure, then it's simply not within an area of value. And if it's looking too messy, too choppy, don't trade it. Leave it alone. Wait for those high probability setups. Wait for those prime opportunities where price action is clean, it's clear, you've got multiple confluences. And so if you're unsure, walk away. All right, so let's have a look at USD CAD. So we have just had some news. We had the CAD GDP. You can see there's not been a huge amount of volatility following from that news release. So I'm still bearish on this. We are still making lower lows and lower highs on the daily time frame. And we still have this descending trend line acting as resistance, and we've retested this ascending trend line multiple times here. Now, we're in an area of high value around psychological level 1.3300, and there's two scenarios here. Throughout this whole retracement, we can see that price action was noticeably corrective, more so corrective than this, so we are treating this as a retracement. And I can see price either rolling over from here and following from these multiple high test rejections. It does suggest that this is a key area of liquidity and that there are a lot of sell orders within this region. So, it would be more probable that price could actually roll over from here. But what is also a likely scenario is that we actually pop up a little bit higher. And you can see that I've got a price alert marked up here around 1.3340. And we retest these previous highs. So we come up to retest this previous structure, get people caught on the wrong side of the market, and then we basically fall from this area around 1.3340 to 1.3350. So keep an eye out for both scenarios. We're in a really key area for this currency pair, and whether we go from here at this current price point or whether we go from 1.3340, there's a huge amount of downside potential, So, so keep this currency pair high on your watch list. We are actually running a position at the moment. We entered around here, so we're probably hovering around entry price at the moment. Let's just have a look at the 4-hour quickly. Yeah, so we entered around here, and as you can see, we just about broke through the 4-hour 50, and we've now simply come back up into this level of liquidity. But, price is very, very corrective. And again, this is due to the lack of volume. Oil itself has been looking a little bit more bearish over the last few days as well, which probably hasn't helped with the correlation here. And if you're not already in this, then maybe wait for a break and a retest of this ascending trend line. Or if we do pop higher, as I say, you want to be monitoring price action around this area here. So keep this on your watch list, guys. US dollar CAD historically has long periods of consolidation, and then it has these large impulsive breakouts. So there's definitely some moves happening. There's these big impulsive moves pending, as I said at the beginning of this video. So you just need to be prepared for them. So that's US dollar CAD. Let's have a look at USD JPY. Again, as you can see here from the higher time frames, we're in a very key area. We have this descending trend line acting as potential dynamic resistance. We have this rising wedge formation, which is a bearish reversal formation. Price action is very, very corrective at the moment, very corrective. We've had this little impulse higher, following from a rejection, this trend line and the daily 50 EMA. So actually there was a really nice trade there, which I missed from around here. That would have been a really nice little trade up into these highs again. And I'm really interested to see how price action starts to unfold around this level here. Technically, we're still in a bullish sequence. We're making higher highs and higher lows on the daily time frame. But if we see the confirmation that we need in order for us to take a short position, selling from these kind of levels is always going to be lucrative, especially when we see these patterns develop and unfold in this kind of behavior. So again, this is in a really key area. So if we do see that deceleration in US dollar strength, then again, this will naturally start to weaken off as well. And if you do see price action unfold in the way that you want it to, this is a great opportunity to implement the reversal strategy. And for those of you that are a part of the community, you should know how to implement that and how to capitalize on these kind of moves. So let's have a look at some pound pairs. So GU, GBP, USD, we're stuck in this flag pattern at the moment, and we're effectively in a range. So I've still got these levels marked out on my charts. I would love to see price retrace into this kind of zone here around 127. That would be fantastic. Could be a really, really nice trade from here. Alternatively, price may actually only come down to this trend line, and the daily 50 EMA here as well. And if we started to see multiple rejections from here, again, there could be a nice little long position taken from around here as well. GJ, again, very, very similar. Huge impulsive move, very, very corrective price action over the last couple of weeks, stuck in a range. And, we did see this little impulsive move on Wednesday, and we've since now printed quite a nice shooting star candle yesterday, actually more like an inverted hammer, but you can see that that is a very bearish candle. So it'll be interesting to see how today's daily candle closes as well. But I'm still favoring downside. I'm still favoring another push to the downside for us to then take a nice long position. So short-term selling, long-term buying. GBP AUD, again, been very corrective over the last few days. We took a short position from around here. We then got stopped out at break even though it was in 130 pips profit. That was just one of those things. We managed the trade, and this was a larger swing move that we were looking to capitalize from. And price then sharply reversed in the opposite direction, stopped us out for break even, which is just one of those things. So we've since popped a little bit higher. Again, following from that GBP buying on Wednesday, we then tapped the higher time frame outer structure. And if we have a look at this on the weekly, we can see this whole move is very, very corrective. And this kind of ascending trend line has acted as dynamic resistance multiple times. So this is in an area of high value. A very, very key area. So if we go back to the daily, very nice high test bearish candlestick, rejecting that outer structure. Very corrective price action here. So I'm really interested to see again how the daily candle closes and whether or not we continue to see that bearish momentum going into next week, because I still want to be able to take this down to the daily 50 or even down to this ascending trend line and then look for the buy. But this is looking really clean. This is looking really, really good for a continuation to the downside. Obviously, there was a lot of people that got stopped out. There was a lot of people that got caught on the wrong side of the market. If we have a look at the 4 hour, the 4 hour here is suggesting a buy, because if we look at this for what it is, we're making higher highs and higher lows. And we've since come down, and there's 3, maybe 4 confluences here. So we've got the 4 hour 50, we've got the 61.8%, and we've got this third touch of this ascending trend line, right? So if price did come to this area again, retested the 61.8% and rejected it, and did actually give us this third touch of this ascending, then you could look for a buy. But when we look at this from the higher time frame perspective, buying at these levels is just not a high probability. So there is a higher probability of price rolling over from these highs than price continuing in its uptrend. Now, that's why multi-time frame analysis is so important, and always looking at the higher time frames is absolute key to trading, because as long as you're following the higher time frames, then you're going to be trading the trend all the time. Now, if we just remove this fib, we have this level of structure which has previously acted as resistance, and as you can see, is currently acting as resistance again. So for me, I think the best way to approach this trade would be wait for a break below the trend line and the 4-hour 50, wait for a retest, and then enter upon the retest. So wait for something like that to happen, because this could be a really nice trade. We may get some sort of like head and shoulders pattern where price comes down to here, creates a neckline, comes back up to form the right shoulder, and retest this level of structure again, retests the ascending trend line, and so on. That'll be some sort of fib level, and then you can enter upon the retracement. Whether we get the head and shoulders is kind of irrelevant, but you kind of get what I'm saying. So wait for that break of the ascending trend line, that invalidation of the bullish sequence, and then, for those of you that want to enter this in the safest manner, this would be the way to enter. So let's have a look at AUD USD. We're in a really key area, and it's going to be quite important to see how this daily candle closes. But if we fib this larger move from A to B, you can see that the 61.8% is still holding. Now, this current daily candle hasn't closed yet, so we can't actually base the fact that this may have broken the 61.8% until this daily candle closes. It might well close below the 61.8%, and it might close with very bearish characteristics, in which case that could suggest that price is going to continue moving to the downside, potentially revisit these lows here. But we really have to see, because we could see that price was building a really nice base here for a potential reversal to move to the upside. And I think this is more US dollar strength than actual Aussie dollar weakness today. So yeah, let's see, because this again is in a really crucial area. And if this did take off from here, the likes of EA will roll over, GA will roll over. So there could be some really nice moves going into the first or second week of December. So talking about EA, let's have a quick look at EA. So, very, very corrective price action over the last couple of weeks, really. It's failed to break this intraday level of support. And for me, I would want to see this level broken. I would want to see this level of intraday support broken and then retested. So the safest way to approach this market would be wait for a break below this level of support, which I've got highlighted here. Wait for it to break, retest, and then enter upon the retracement. EN has been moving really, really nicely. I mean, it is very corrective by nature. If we have a look at this whole price action on the daily, it's very, very corrective. It's very, very corrective. But albeit, there's been some nice cyclicity here. You can see that price has been making lower lows, lower highs, lower lows, lower highs, and so on. And there's been lots of little breaks and retests for intraday opportunities to go short on this currency pair. We came within like 5 pips of the minus 27%. So again, when we hit the minus 27%, we can always expect a reaction, whether it's the minus 27% or our second fib extension, which is the minus 61.8%. So we may get a reversal from here. And, we need these retracements for us to then enter within the areas of highest probability. So if we do see a retracement, back up into this trend line, for example, and the fib reversal zone, then, we could then look to go short once price has retraced into an area of value. If we have a look at the daily, the daily has broken this level of structure here. So this level of support was really key for this currency pair. And you can see that we rejected it. And then we really struggled around this level again, and it's finally snapped. Now, that just reinforces the fact that this structure has now been broken, and we can confidently continue looking for reasons to go short. So if we do see that retracement, back up into this descending trend line, or maybe we'll retest key level 1.7300 and the daily 50, but I think we should only be looking to continue selling this if we're looking at the overall trend. The overall trend is making lower lows and lower highs. We've broken this level of structure. So if we do see a retracement, we should continue looking for selling opportunities. Now, if you're aggressive, you may want to trade the counter trend move, which of course always comes at a higher risk. But if that's your style of trading, then there's nothing wrong with that either. New Zealand dollar, US dollar, very, very corrective at the moment. I'm seeing whether or not we can just retrace a little bit lower to the daily 50 in this ascending trend line to then take a long position, or whether we can actually break this level of resistance and then allow the market to show us its hand, confirm that there is a continuation happening, making higher highs and higher lows, and then we can look to enter once we've got that confirmation from the market. At the moment, there's no trade setup for me. It's very corrective. There's multiple days of consolidation here. So I'll be sitting on my hands with this one. There's nothing really to get excited about at the moment. We're not in areas of high value. So as I say, wait for that retracement to the daily 50 and the ascending trend line, or wait for the breakout, the retest, and then we can gain some interest. So Euro JPY, quite interesting. You can see that we rejected the 50% fib, broke above the daily 50 EMA, came back to retest it, and then we since broke out of this descending trend line, and it's now looking like it wants to push higher. So it's, it does look a little bit messy still, but if we have a look at it on the 4-hour time frame, it's developing quite nicely. Now, from the daily time frame confirmation, we're making higher highs and higher lows. We've had that rejection from one of our fib levels. Price seems to be building a base, seems to have created that new higher low. And now looking at the 4-hour time frame, we've had a break above the descending trend line, which was acting as dynamic resistance. And we can now look for the retest. So if we plot a fib from A to B, so from the last low to the current high, you can see that price is really decelerating. And if we do get that retracement into, say, the 38.2%, this would be our first area of interest to take a long position. Now, we have multiple confluences around this level. We have a potential retest of this descending trend line. We have the 4-hour 50 EMA, and we have the 38.2%. So if we did see price come down to the 38.2, decelerate, dropping down to the lower time frames like the 1 hour and the 15-minute, looking for that price action confirmation, looking for what we need in order to execute a position. And then, you could potentially, let's say that price came down to the 38.2, you could have like a 20 pip stop, and you could target the previous high up here. It's a nice 6% trade on what is an intraday move. Now, if you were going to swing this, and we were going to swing it to the longer term minus 27%, then you're now looking at a 12% trade. So higher time frames are looking clean. We've had that confirmation of a breakout on the lower time frames. We're simply waiting for that retracement. And if we do see multiple rejections around the 38.2, then this could be a really key area to take this long. I think there's a lot of upside potential in this pair. This won't be a trade for today. This will be a trade for next week now. But definitely get this marked up in your charts, guys, because this is developing nicely. So AUD JPY, this was a trade that we took on Wednesday. And again, this was all built from the higher time frames. So on the daily chart, we could identify that price was making a sequence of higher highs and higher lows, therefore in a bullish uptrend. And you can see that we've got this ascending trend line, and where price started to interact with the daily 50 and also this area of interest around the ascending trend line for a potential third touch, you can see that price has become more and more corrective. It was building a base for a potential break to the upside. Now, the third wave drive of any sequence is always going to be the highest probability. So we're looking for that third wave drive here. As you can see, we had 1 retracement, 2 retracement, and this would be the third wave drive to go from here, okay? So there is a high probability that price could actually impulse higher from here, and we've got multiple key confluences on the daily time frame. So if we drop down to the 4-hour, so price was becoming noticeably squeezed within this wedge formation, if you like, and we were simply waiting for a breakout. Now, we were also waiting for 2 very important key things as well, which number 1 was to get above the 4-hour 50, and number 2 was to get above the daily 50 as well. That just reinforces the trade idea, because if we're above the daily and the 4-hour 50, we've got 2 really strong confirmations there. So we are just seeing this pull back a little bit. Again, lack of volume, very corrective price action here. So, if this sort of trickles its way down back to this ascending, we may get stopped out, which is fine. I would just simply look for another reason to go long, or we may see this impulse higher into next week, which will be fantastic. And then we can just manage the trade accordingly. So CAD Swissy. Now, this has actually got my interest at the moment, because ever since making lower lows and lower highs and rejecting this level of support, price has since remained quite impulsive, breaking above the daily 50. And if we have a look at the 4-hour time frame, we can see that price has now broken out of this falling wedge, this descending wedge. It's failed to make a new low, And if we look at this previous high here, price is now broken above this previous high, invalidating the bearish sequence, and is nicely above the 4-hour 50 EMA and the daily 50 as well. So I'm just simply waiting for a retracement. If we get that, and if we do get a retracement, I'll be looking for reasons to take this long, because even if we target the previous highs here, there's still like a nice 150 odd pips to the upside. So this could be a nice little intraday move, and the higher time frames are looking clean. The 4 hours looking really clean. So if we do see that retracement, that will then give us an opportunity to take this long with some nice upside potential. And the last pair that I'm going to cover is CAD Yen. So CAD Yen, I know a few of you actually got in around here, which is fantastic. So having a clear understanding of the higher timeframes is always going to make you a successful trader. We were anticipating a bounce from here as price was in a bullish sequence. Not only that, we could see that this was very impulsive, followed by a correction into an area of value around the 61.8%, a third touch of this ascending trend line. And there was actually some market structure around here as well. So, multiple confluences here. We had 2 days of nice low test candles, suggesting that the price attempted to push down, and then the bulls came back in, printing these daily candles with these nice low wick rejections. So price has since impulsed to the upside, breaking above the daily 50, the 4-hour 50, and also this descending trend line. So it's now broken out of the pattern. And if we have a look at the 4-hour, again, you can see that we've now broken out of the pattern, and we've since consolidated for quite a few hours now. So we're just creating this kind of mini flag. Now we could actually retest the trend line and a 4-hour 50, and this could be a nice area to take a long position. So if we just fib that, do it from A to B. Yeah, so I mean, if we came down to the 38.2, retested this trend line, this could be a really nice area to take this long. Again, the first target would be the previous high here. Second target would be that longer term fib extension, the minus 27%. So this is probably one for next week as well, guys. Keep this on your watch list because this is entering an area of value, and we know from the higher time frames that this is bullish. So as soon as we see price retrace into an area of value, that then gives us an opportunity to buy at the best possible price with a nicely protected stop loss, and then we simply just follow the trend. So lastly, I'm going to cover US 30. I covered this in my previous video last week, but I'm going to cover it again because it's just in such an important area. So this is US 30 on the daily time frame. Again, we have this rising wedge formation, which I covered last week, and we have this inner trend line, which price hasn't actually broken below yet. It's still holding. So we did form this shooting star. We came down to the trend line, we rejected it. We have one last push to the upside, and we're now interacting with this outer structure on the higher time frames. So if we scale down to the 4-hour quickly, now you can see that we're really struggling around these highs now, and the momentum is really peaking off. So as I said last week, we really want to see a break below this trend line. We want to see a break below the 4-hour 50 to then start building a case to take this lower. Now, selling at these kind of extreme highs is always very attractive. As long as you're only risking 1%, it's always worth that risk because the opportunities are too good to miss. But let's say that you took a 1% loss, or maybe 2 1% losses. The downside potential is so huge that it's always worth the risk because you can bank a minimum of like 10% or 12% or even 20% on a trade like this. So for those of you that are trading equities, for those of you that are interested in the US equities market, keep this on your watch list because like all of these US indices, they're in such key areas. So as always, guys, I'll keep you updated as things progress and unfold. I wish you all a fantastic weekend. Trade safe, and I'll catch up with you next week.